Welcome to the deep dive. You send us the sources, we pull out the important stuff. Today, we're really getting into Berkshire Hathaway's 2025 proxy statement and some related bits and pieces.
Yeah, think of it as your condensed guide to what's happening at Berkshire right now and maybe what's coming down the pike.
Exactly. This isn't just, corporate filings. It tells a story about governance, money, shareholder views, the works.
Right. And our aim is to give you those key insights, the surprising facts maybe, without you getting totally bogged down in hundreds of pages. We want you to get the essence.
We've got the proxy itself, obviously, but also some context on the businesses, the culture, and even some interesting highlights from the big meeting in Omaha from a YouTube transcript. So let's just jump right in.
Okay, so first things first, access. The proxy statement, the 2024 annual report, they made sure those were up online.
Standard practice, but good. Makes it accessible.
Totally. And the big event, the annual shareholders meeting, that was May 3rd, 2025. Back in Omaha, Nebraska, as always.
Quite the pilgrimage for many shareholders, right?
Oh, absolutely. Now, this whole proxy statement, fundamentally, it's the board asking shareholders for their vote. Soliciting proxies, as they say.
And it's important people know if you send in your proxy, you can change your mind, right? You can revoke it before the vote actually happens.
Precisely. And Berkshire picks up the tab for this whole process, sending out the materials and getting the votes.
Okay, so how do decisions get made? First, you need enough people, or rather enough voting power. That's the quorum.
Yep, a majority of the voting power needs to be there in person or by proxy.
And electing directors. How does that work?
It's a plurality system.
Yeah.
Basically, the nominees who get the most for votes get the seats. Pretty straightforward.
But there's that interesting corporate governance guideline they have. It's not just about getting the most votes.
Right. This is quite key. If a director in an uncontested election gets more withheld votes than for votes, well, they have to offer to resign.
Seriously. So shareholders have a real way to signal displeasure, even if there's no alternative candidate.
Exactly. Then the other independent directors have to look at it and decide whether to accept that resignation. Adds a layer of accountability,
Okay, let's talk about who these directors actually are. For 2025, there were 13 nominees.
Let's run through them. The proxy gives a little snapshot. First, obviously, Warren Buffett, age 94, his additional qualification.
Let me guess. Pretty experienced.
Says 55 years as chairman and chief executive officer. 55 years. That's something.
Understatement of the year. Okay, who else?
Gregory E. Abel, he's 62, vice chairman for non-insurance operations. Former CEO of Berkshire Hathaway Energy, board experience at Kraft Times, too. Deep operational background.
Then there's Howard G. Buffett, Warren's son, age 70, runs his own foundation, the Howard G. Buffett Foundation, and was sheriff of Macon County, Illinois for a bit.
Yeah, quite a mix. And Susan A. Buffett, Warren's daughter, she's 71, chairman of the Sherwood Foundation and the Susan Thompson Buffett Foundation. Very involved in philanthropy.
Stephen B. Burke, 66. Heavy hitter in media. Former chairman and CEO of NBC Universal, president at Comcast Cable, now on the J.P. Morgan board.
Kenneth Chinas, 73. Hugely respected. Former CEO and chairman of American Express. Now he's chairman and managing director at General Catalyst, a venture capital firm, also on the Airbnb board.
Christopher C. Davis, 59. He's chairman of Davis Advisors, an investment firm. Sits on the boards of Coca-Cola and Graham Holdings.
Susan L. Decker, 62. Brings a lot of tech experience. Founder, CEO of Rafter, former exec at Yahoo. She's on a bunch of boards, Costco, Vail Resorts, Chime.
Charlotte Guyman, 68, former general manager at Microsoft, now an advisor at the University of Washington's Brotman Batty Institute.
Ajit Jain, 73, vice chairman for insurance operations. He's legendary in the insurance world. Executive VP at National Indemnity. Absolutely crucial figure.
Thomas S. Murphy, Jr., 65. Partner at Crestview Partners, that's private equity, used to be a partner at Goldman Sachs. Solid finance background.
Wallace R. Weitz, 75. Founder of Weitz Investment Management. Knows the investment game inside out. Director at Cable One.
And finally, Merrill B. Whitmer, 63. Managing member at Eagle Capital Partners, another investment firm. Former general partner at Buchanan Parker Asset Management.
So that's the slate of 13. And it's noted that one of the 14 directors who was serving before this meeting wasn't recommended for nomination this time around.
Always interesting when there's a change like that. Now, independence is a big deal in corporate governance. How many of these folks are considered independent?
The governance committee looked at it and determined that 8 of them meet the independent standards. That's Burke, Chanel, Davis, Decker, Guyman, Murphy, Weitz, and Whitmer.
But there are relationships to consider for the others, right?
Exactly. Howard and Susan Buffett are, of course, Warren's children. And Ronald L. Olson, who wasn't nominated this year but was on the board, is a partner at Munger, Tolles& Olson.
Charlie Munger's old firm.
The very same. And that law firm does significant work for Berkshire. They were paid about $21.2 million in 2024 for legal services. So those relationships are disclosed for transparency.
Makes sense. Let's talk leadership structure. Buffett is both CEO and chairman, and he holds a massive amount of voting power.
Around 30.3% of the voting interest.
Yeah.
Yeah, he's effectively a controlling shareholder. The board says they've considered this structure regularly and support it, given his, well, unique role in history.
Succession is obviously top of mind for everyone. What's the plan there?
The board discusses it frequently. The thinking is, once Warren is no longer involved in management, no other Buffett family member will actually run the company day to day.
But they might still be involved?
Yes, the idea is they would help the board select and oversee the next CEO. Warren has even suggested that maybe Howard Buffett could serve as a non-executive chairman at that point, sort of a guardian of the culture. But ultimately, the future board decides.
And the annual meeting Q&A, that's a big part of their communication, isn't it? How do they handle the questions?
It's pretty open. Questions come from the floor in Omaha, but also shareholders and others can submit questions beforehand to a journalist, currently Becky Quick from CNBC, who then selects some to ask.
So it's not just softball questions from insiders.
No, they aim for a broad mix. Now, risk oversight, who's responsible for that?
The whole board, primarily. They get reports from management on risks at least twice a year.
And the audit committee also digs into risk assessment and management policies specifically. But get this, Warren Buffett himself is formally designated as the chief risk officer.
Really? He wears that hat too.
Apparently so. And interestingly, they mentioned that Berkshire doesn't really rely much on outside advisors or consultants to figure out potential threats. They handle that internally.
Okay, the governance committee, what exactly do they do?
Their job covers the company's governance guidelines, nominating directors, looking at the CEO's compensation, and other related governance stuff.
How often do they meet?
According to the proxy, they met just once in 2024.
Interesting. Now, when they're picking director nominees, what are they looking for? Is there a diversity policy?
No formal policy specifically mentioning diversity. Instead, they focus on criteria like high integrity, business savvy, being owner-oriented, having a genuine interest in Berkshire.
And owning stock, right?
Yes, that's key. They want nominees to have held a significant investment in Berkshire stock for at least 3 years. Skin in the game.
And can regular shareholders suggest someone for the board?
Yes, there's a process. You'd need to send a formal recommendation to the corporate secretary. For the 2026 meeting, the deadline would be December 15th, 2025.
And the criteria for those recommendations?
The person needs to meet the NYSE independent standards, and again, they must have had that significant Berkshire stock holding for at least 3 years.
Looking at the governance committee members themselves, Guyman, Burke, Chenot, Murphy, none of them were company officers or employees, correct?
Correct. Independent directors running that committee. And they also confirmed there were no interlocking directorships in 2024 where a Berkshire executive served on the board of a company where a Berkshire director was an executive, avoiding those potential conflicts.
All right, let's shift gears to compensation. Berkshire's approach is, well, it's different.
That's putting it mildly, especially Warren Buffett's pay. It's been $100,000 a year since 2004.
And he intends for it to stay that way. Just incredible.
And their policy is crystal clear. Berkshire's profits, its stock price, none of that directly influences how much the top executives get paid.
Which is almost unheard of in corporate America.
Totally. And another thing, they state they have never intended and do not intend to use Berkshire stock for employee compensation. No stock options, no restricted stock units.
So who decides the pay for the other top executives, like Greg Abel and Ajit Jain?
Buffett delegates that. He decides for Greg Abel, Ajit Jain, and also Mark Hamburg, the CFO.
And Buffett reimburses the company for personal expenses.
Yes, he paid back $50,000 in 2024 for costs Berkshire incurred that were personal in nature.
But the company does pay for his security.
It does. Personal and home security services cost $305,111 in 2024. The board justifies this as a necessary business expense, given his role and, frankly, his public profile.
What about perks for other execs? Company cars? Club memberships?
Nope. The proxy says none of the named executive officers, other than Buffett's security, get those things. And Buffett himself doesn't use company planes for personal trips.
So how does Buffett decide compensation if not on financial metrics?
It seems largely subjective, based on his assessment of their performance, responsibilities, that sort of thing. And since around 2018, it's become more decentralized for the CEOs running the subsidiary businesses.
Right. Ajit Jain handles compensation for the insurance CEOs, and Greg Abel handles it for the non-insurance ones.
Exactly, using similar subjective principles, presumably. And those subsidiary CEOs often have various incentive arrangements tied to their specific business's performance.
Okay, let's see the numbers. The summary compensation table. What did it show for 2024?
Right. So Warren Buffett's total was that $405,111, which is the $100K salary plus the security costs.
And Abel and Jane.
They each had a total compensation of $21,017,250. That includes their salary and contributions to their defined contribution plans.
And Mark Hamburg, the CFO.
His total was $4,081,046. Again, salary, planned contributions, and a very small amount listed for personal aircraft use, which is interesting given the general policy.
Now, the pay versus performance table. This is supposed to show the link, or lack thereof, between pay and performance.
Yeah, it's a mandated disclosure. It compared the compensation figures we just mentioned, both the summary table numbers and a calculated compensation actually paid figure against Berkshire's performance over 5 years.
And performance is measured how?
They include Berkshire's net earnings, its total shareholder return, TSR, and the TSR of a peer group, which they use the S&P 500 Property and Casualty Index for.
And what does it actually show? Buffett's pay is flat, basically.
Pretty much. Around $400 each year. The other EO's compensation, particularly Abel and Jane, fluctuates more. And Berkshire's net earnings, all over the place.
Right, because of those unrealized investment gains and losses they have to include now due to accounting rules.
Exactly. Which is why Berkshire explicitly states in the proxy that they do not use financial performance metrics like net earnings or TSR to set executive pay. They think it's misleading.
But shareholder return was pretty good over that 5-year period.
Yeah, Berkshire's TSR was 100.5%. During that same time, the average compensation for the other NEOs, excluding Buffett, actually went up by about 11.3%.
So Berkshire argues comparing pay to net earnings isn't meaningful. What do they suggest looking at instead?
They provide figures for net operating earnings, which strips out those investment gains losses. And that number shows pretty strong growth from $21.9 billion in 2020 up to $47.4 billion in 2024.
So that paints a clearer picture of the underlying businesses.
Definitely. They also reiterate how hard it is to find a real peer group for a company like Berkshire, which is why they land on that P&C insurance index.
And how did Berkshire stack up against that index in the broader market?
Over the 5 years ending 2024, $100 in Berkshire grew to $200.51. The S&P P&C index did a bit better at $227.67, but Berkshire outperformed the overall S&P 500, which is $197.02.
Okay. What about the CEO pay ratio, another required disclosure?
Right. Comparing the CEO's pay to the median employee's pay. For 2024, Buffett's $405,111 compared to the median employee compensation of $82,106.
Which gives a ratio of
Just under 5 to 1, 4.94 to 1 to be precise.
which is incredibly low compared to most large companies.
Extremely low. They do mention the challenge of calculating that median pay figure in such a huge decentralized company. They use a sample covering about 2/3 of their global workforce.
And they determined that median employee back in 2023.
Yes, as of December 34, 2023, using W-2 wages or equivalents. And they stated they don't believe there were significant enough changes to require recalculating it for the 2024 disclosure.
Got it. Does Berkshire have an insider trading policy?
Yes, they do. It's spelled out and available on their website for anyone to read. It covers directors, officers, employees, standard stuff, but clearly defined.
And their auditors, who checks the books?
For 2024, the principal independent public accountants were Deloitte & Touche LLP.
Will they continue for 2025?
That decision hasn't been made yet. The audit committee will select the auditors for the current year later on.
How much did Berkshire pay Deloitte in 2024?
The total fees came to $62.4 million. The vast majority, around $57.5 million, was for audit services. There were smaller amounts for audit-related, tax, and other services.
And the audit committee was okay with Deloitte doing non-audit work?
Yes, they reviewed it and concluded that those other services didn't impair Deloitte's independence. And importantly, all services provided by Deloitte have to be pre-approved by the audit committee.
What does the audit committee's report actually say?
It's dated February 19th, 2025. It confirms they reviewed the 2024 financials, discussed them with management and with Deloitte. They talked about auditing standards, Deloitte's independence.
But they don't actually do the audit themselves.
No, They emphasize their role as oversight. Management is responsible for the financial statements, and the independent accountants are responsible for the audit. The committee relies on what management tells them and what the auditors report.
And their conclusion.
Based on their reviews and discussions, they recommended to the full board that the audited 2024 financial statements be included in Berkshire's Form 10-K filing.
Okay, let's talk about who owns Berkshire stock, starting with the insiders, directors, and executives.
Warren Buffett obviously is the big one. He controls a huge chunk of the Class A shares and also holds Class B. It adds up to that 30.4% voting power and about 14.4% economic interest.
And other executives.
The table shows holdings for Greg Abel, Ajay Jain, Susan Buffett, and others. Abel and Jain have significant holdings, though obviously much smaller than Warren's. There are lots of footnotes explaining things like shared ownership or disclaiming beneficial interest in certain shares.
And that voting agreement Buffett has.
Right, he's agreed that if his voting power ever goes above 49.9%, he'll vote the excess shares proportionally with how other shareholders vote.
What about large outside institutions? Who owns big stakes?
The proxy identifies several beneficial owners holding more than 5% of either Class A or Class B stock. Besides Buffett, you have FMR LLC, that's Fidelity, BlackRock, Vanguard, and State Street Corporation, typical large institutional holders.
How are the directors compensated, the ones who aren't employees?
Employee directors like Buffett, Abel, and Jain don't get paid extra director fees. Neither does Susan Buffett, is the spouse of an employee, Warren.
And the others?
The non-employee directors get fees for attending meetings. It's like $6,000 for in-person, $3,000 for telephonic. Audit committee members get an additional $3,750 per quarter. Plus, they get reimbursed for expenses.
Does Berkshire provide D&O insurance? Directors and officers liability insurance?
Interestingly, no. The proxy explicitly states the company does not provide D&O insurance. That's quite unusual.
Very unusual. Okay, Section 16A reports these are filings about stock ownership changes by insiders. Any issues there?
The company states its belief that everyone complied with the filing requirements during 2024 based on the forms they received and representations made. Seems all clear there.
All right, let's get into the shareholder proposals. These often spark some debate. How many were there this year?
There were 5 formal proposals included in the proxy statement that shareholders voted on. And the meeting transcript mentions another one related to AI.
Okay, proposal number 1, about environmental reporting for BHE.
Yes, from the National Legal and Policy Center. They wanted Berkshire Hathaway Energy to publish an annual report detailing its voluntary environmental activities, the costs, the benefits, basically questioning the value and transparency of BHE's net zero goals. They used the term greenwashing.
And the board's response?
Unanimous recommendation.
Yeah.
Vote against. They essentially said the report was unnecessary and wouldn't provide meaningful additional info beyond what's already available or required.
Proposal 2. This one's about executive pay ratios.
Right, from shareholder Jing Zhao. The idea was to include the pay ratio of the highest paid executive who isn't the CEO as a factor in setting compensation. The proposal cited rising CEO pay generally and suggested this might foster more fairness.
What did the board think?
Again, unanimously against. They argued the CEO pay ratio is already disclosed as required by law, and adding another ratio wouldn't improve their compensation program, which, as we discussed, isn't based on metrics anyway.
Proposal 3. This sounds potentially contentious. Civil rights and non-discrimination.
Yes, from the American Conservative Values ETF. They requested a report evaluating potential discrimination based on viewpoint, religion, race, etc., expressing concern about divisive concepts like critical race theory and potential risks from DEI initiatives, citing recent court cases.
How did the board react?
Unanimously against. They stated the report wasn't necessary, reaffirmed commitment to legal compliance, and pointed out that the audit committee already has oversight responsibility for social risks, including diversity. They also specifically denied having a resource library promoting unconscious bias, which the proposal seemed to imply.
Okay, proposal 4, also related to diversity and inclusion, but asking for a dedicated board committee.
Correct. Submitted by Whistle Stop Capital on behalf of Myra K. Young. It argued that given the potential benefits of DEI and past discrimination lawsuits involving Berkshire subsidiaries, a dedicated board committee was needed for better oversight of human capital management and D&I strategy.
And the board's view?
Unanimously against. Their reasoning was similar to the previous one. They believe the audit committee's existing charter already covers oversight of diversity-related policies and risks, making a separate committee redundant.
5th proposal, a clean energy financing ratio.
From the As You Sow Foundation. They highlighted climate risks, Berkshire's insurance losses, its fossil fuel investments, and underwriting activities, arguing shareholders need a metric to track the company's transition towards clean energy, similar to ratios used by banks.
What was the board's take on that?
Unanimously against. They argued that this kind of ratio is designed for banks and isn't relevant or appropriate for Berkshire's business model, which isn't primarily about financing energy projects in that way.
Now, that other material, the pasted text, it seemed to touch on broader business health, right? Like insurance, Geico, BHE performance.
Exactly. It hints at the kinds of discussions you hear at the annual meeting. How are the core insurance operations doing? Is Geico turning around? What's the latest with Berkshire Hathaway Energy, especially with things like wildfire risk? Which non-insurance businesses are shining?
And it mentioned Charlie Munger's absence and the company culture.
Yeah, definitely themes people were talking about. How does the meeting feel without Charlie? How does Berkshire maintain that unique culture as it grows and inevitably changes leadership? Those are big ongoing questions.
And the YouTube transcript from the meeting itself gives us some direct answers in color. Greg Abel being described as practicing the job of CEO.
Right. Buffett really emphasized Abel's deep involvement, especially in capital allocation decisions like those big, successful investments in Japanese trading companies, really positioning him.
And the cash pile debate came up again.
Always does. How Berkshire's huge cash hoard provides flexibility, especially during a leadership transition.
Tim Cook's presence was noted too. Hard to ignore when the CEO of your biggest holding shows up.
Definitely underscores the importance of Apple. There was some talk about Apple's demand, looking beyond just tariffs, especially sales trends in China.
What about those anniversary books?
Yeah, the 50th and 60th anniversary books, spearheaded by Carrie Scava. They mentioned the fundraising tied to it for the Stevens Center, with Buffett matching donations. Apparently, some signed copies went for huge amounts at auction.
Wow. And Jeff Rocker from Berkshire Hathaway Automotive talked about tariffs and car affordability.
He did mention tariffs impacting parts, a recent sales surge possibly driven by FOMO, fear of missing out, but expecting demand to cool off. And yeah, affordability is a major challenge in the auto market. Hillary Clinton was apparently in the audience too.
Interesting. What about AI? That came up in relation to insurance.
It did. Abel and Jane both weighed in. The gist was acknowledging AI's potential impact on risk assessment and pricing, but also maybe some skepticism about its current revolutionary power in their specific domains.
And Buffett and Abel reiterated some core Berkshire principles.
Absolutely. Patience, being prepared, acting fast when opportunities appear, valuing the trust people place in them, always thinking long-term. Classic Berkshire philosophy.
There was advice for a young shareholder, too.
Yes, from Buffett, with Abel chiming in about the importance of hard work and staying curious.
And the wildfire issue for utilities.
Buffett was pretty clear that Berkshire can't just be the insurer of last resort for everything, highlighting the need for sensible government energy policy to address those massive systemic risks.
Any interesting anecdotes?
There was one about Buffett's persistence in meeting someone at Geico way back in 1951, contrasted with maybe a less enthusiastic response he gave someone more recently. Showed a bit of his personality.
The cash position, investment opportunities, insurance float, those perennials were discussed too.
Of course. The massive float, its negative cost, that's still the bedrock. Talk about the cash pile, where it might go. Buffett's historical approach to market downturns. Standard but important annual meeting fare.
And share buybacks. Anything happening there?
Mentioned that no shares had been repurchased so far in 2025, and there was some discussion of the new tax implications affecting buybacks.
Ron Price from Nebraska Furniture Mart offered some broader economic commentary.
Yeah, talked about navigating tariffs, shifting supply chains away from China towards Southeast Asia, and expressed concerns about longer-term U.S. economic challenges like federal debt and education.
And the big news, really, was Buffett explicitly naming his successor.
That was probably the headline moment from the transcript. Buffett stating clearly that Greg Abel is the person he believes should be the next CEO, and that's the recommendation he'd make to the board. It removes any lingering ambiguity.
So, wrapping this deep dive up, looking at the proxy, the meeting notes, it really gives you a multifaceted view of Berkshire Hathaway.
Absolutely. You see the formal governance structures, the director qualifications, the unique compensation approach, but you also get a sense of the strategic thinking, the engagement with shareholders on tough issues like climate and diversity.
And the shareholder proposals themselves, even though the board recommended voting against them all, they bring important perspectives to the table.
They really do. They reflect broader societal concerns and push the company to articulate its stance. And then you have the insights from the meeting itself, the succession clarity, the views on AI, the economic outlook.
Were there any particularly surprising details for you? Buffett's stable salary is always striking, but maybe the lack of D&O insurance?
That's definitely unusual for a company this size.
Mm.
Also, just the sheer breadth of topics the board and management have to grapple with, from insurance intricacies to global supply chains to AI ethics.
Looking ahead, what does all this information prompt you to think about regarding Berkshire's future?
Well, the succession question is largely settled in terms of the individual, but the bigger question is how Greg Abel will navigate the future. Will the culture remain? How will capital allocation change, if at all? How will they tackle things like AI and climate risk over the long term?
It really sets the stage for the next chapter. And for anyone listening who wants to dig even deeper into any of this, the proxy statement itself is obviously the place to start.
Definitely. It's dense, but rewarding, if you want the full picture.
So the final thought maybe centers on that transition. With Abel clearly designated, the focus shifts from who to how. How will Berkshire evolve under new leadership while trying to maintain the magic that made it what it is?
That's the multi-billion-dollar question, isn't it? Something everyone invested in or watching Berkshire will be keenly observing in the years ahead.